So 2020 has been a pretty interesting year. We had a lot of stuff happening that have affected us in one way or the other. On the other hand, more people have been putting their money to work. So from February to July of 2020, there has been 2.5 times more CDP account opening versus normal periods. This means that more and more people are trading or investing, which could be due to furlough that people are getting, keeping people at home, and hence they have more time to look at their investment, or people like me who started reading and researching about investing. But here comes the danger of the stock market. Should you be investing or trading stocks? What are the differences they have, and what are the risks involved in that? Hello beautiful people, my name is Jordan and welcome to the channel. If you're new, thank you for stopping by. I do hope you enjoy the content, and if you're one of the OGs, thank you so much for constantly supporting me. Hitting the like button gives a little help to the channel, so don't be shy and give that little button a push. So I started a small stock portfolio when there was a lockdown in Singapore. During this time, I did some reading, I did some research, and also started this channel. But recently the stock market has been going crazy. Stocks like Tesla going to $1,000, splitting and going up and up. And this begs the question, should I be investing or should I be trading? When it comes to wealth generation, there are some in the camp of investing, there are some in the camp of trading. Both of these methods are great to generate wealth, but they both got their conditions, timelines, and risks involved. So just imagine this, you and your friends were given some seeds. You look around and see, hey, somebody will buy these seeds for a high price and therefore you sell them for a profit. Your friend on the other hand takes the seeds, starts planting them, and over the years it produces more seeds which he sells and continues to do so for the following years. Both of you earn profits but in very different methods. So that's the main difference between traders and investors. So in trading, traders are always looking for price action or price movement of stocks. This is where you
buy low and sell high. It's to buy cheap and sell expensive.
And generally you want to buy a stock at $5, sell it for a profit of $8 or $16, earning you that small profit. Basically with trading, it's the skill of timing the market and entering at the right time and the right price. But with investing, you'll be taking a very different track. Investors acquire the art of generating wealth by compounding dividends or interest over a long period of time by holding good quality stocks. So investors and traders both have very different timeline and time periods as well. This doesn't mean they live in different time zones or different universe.
Barry is from another universe.
So for traders, their money is moving in and out of the market over a very short period of time. This can be minutes to days, and most traders do not put their money in the market for more than a week because of the inherent risk that it holds. So traders focus on short time periods with high performance. Some traders are able to generate as high as 20 to 30% gains per week. This is great money because there are people who trade for a living, and dollar bills, y'all, dollar bills.
I love them strippers.
But for investor, the timeline alters a little bit more because investors usually deploy a buy and hold principle, or in some terms they hodl, which means hold on for dear life. By holding quality stocks for long periods of time, the small price movements in the market doesn't affect the investor because his goal is to keep holding and keep getting dividends. So when it comes to dividends, if your portfolio is diverse enough and it's not focused on one single industry, it provides you constant cash flow regardless of good times or bad times. Last but not least, we have risks. With trading, a lot of these trades are based on price movement, news catalysts, and etc. So imagine when Trump tweets something, the price just shoots. Or when Elon Musk tweets something, the price could just crash.
You're Elon Musk. I am?
So essentially, the more trades you are doing, the higher risk of catching a falling dagger. And you're trying to time the market, which is something pretty hard to do. As compared to investing, most investors will probably buy and not sell at all. Like some shares in my portfolio, I haven't sold them since the day I bought it. But I did make a little bit of adjustment to rebalance my portfolio to give me more dividends. So to show you an example of the difference in risk, here's a chart from Fidelity. If you were to stay invested with $10,000 in the S&P 500 index from the 1st of January 1980, you'll probably have $1 million right now. But if you just miss 5 of these best trading days, you have 590,000. If you miss 10 of these trading days, you end up with 425,000. And if you miss 30 of those days, your $10,000 will only be 150,000. And if you miss 50 of the best trading days in the last 40 years, you end up with $68,000. So the important takeaway I have here is to focus on time in the market and not timing the market, which is very hard to do. There are many differences between trading and investing. This could go on and on, but I hope that this has given you some insights, allowing you to understand a bit better before you start buying your first stock. But to me, the most important thing with either investing or trading is to get started. Many times all of us procrastinate, we end up not doing anything because we realize that, you know what, it's too risky, the price is too high, blah 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 blah. But if we end up not doing anything at all, I think that's the biggest risk in life. So regardless of trading or investing, as long as you start, you will learn something from it regardless whether you lose money or not. But nonetheless, if you're looking for a broker, I have left links in the description down below. You're able to reach out to Tiger Brokers to get trading fees as low as $1.99 for US stocks or 0.08% for the Singapore stocks. So let me know in the comments down below, are you a trader or are you an investor, or are you a little hybrid where you trade a little bit and then you invest a little bit as well? Like, subscribe, and share this video with your friends, and I'll see you in the next video.